The specter of tariffs looms large as former U.S. President Donald Trump rekindles his aggressive trade policy rhetoric. Announcing potential new tariffs on imports from Mexico, Canada, and China, Trump aims to recalibrate the U.S. trade deficit and bolster domestic industries. The ripple effects extend far beyond North America. Trump's recent declarations align with his long-standing narrative of prioritizing American manufacturing and protecting U.S. jobs. Proposals include higher tariffs on Chinese tech products, agricultural imports from Mexico, and specific categories of Canadian steel and aluminum. While such measures are aimed at fostering domestic economic growth, they simultaneously upend existing trade agreements and disrupt established supply chains, with cascading effects on global markets. Indian equity markets initially responded positively to U.S. market gains following Trump's announcement. Optimism for Indian exporters in technology and pharmaceuticals buoyed early trading. However, profit booking soon tempered gains, leading to a flat close. Indian manufacturing firms braced for cost increases, while IT companies watched for disruptions. The reshuffling of trade dynamics poses both risks and opportunities for India. India could benefit from companies diversifying supply chains away from China, aligning with the Make in India initiative. However, higher raw material costs and reduced market access could offset these gains. Tariffs on Chinese goods might accelerate relocating manufacturing to India, requiring substantial investments. Increased consumer prices from higher input costs could dampen domestic demand, slowing economic growth. History provides useful parallels. During the US-China trade war, Indian exporters faced fluctuating demand as buyers sought alternatives to Chinese products. The absence of robust policies limited India's gains. The oil price spikes of the early 2000s showed the vulnerability of emerging economies. India's response must be proactive. Strategies to shield industries from volatility while leveraging growth opportunities are critical. Investors are reassessing portfolios due to global trade tensions. Domestically focused sectors like consumer goods, healthcare, and renewable energy are gaining interest. Export-reliant sectors like automotive and IT face risk reevaluation. Emerging sectors like electronics and pharmaceuticals benefit from supply chain shifts. Diversification remains key in managing risks during uncertain times. Trump's tariff threats come against the backdrop of broader geopolitical tensions. The Middle East remains fraught with uncertainty, with energy prices highly susceptible to conflict-driven shocks. Europe's economic struggles, exacerbated by inflation, limit its ability to counter U.S. policy. India must navigate these headwinds with diplomatic finesse. Strengthening ties with Southeast Asia and Africa could provide alternative markets. India stands at a crossroads. While Trump's tariff announcements present challenges, they also offer opportunities for India to position itself as a key player in the evolving global trade ecosystem. Policymakers must prioritize investments in infrastructure, education, and technology to enhance the country's competitiveness. Moreover, targeted fiscal policies could help cushion domestic industries from external shocks. For investors and businesses, vigilance is key. Monitoring indicators like trade balances, inflation rates, and industrial production is critical. Those who adapt quickly and strategically are best positioned to thrive. For India, the path forward demands leveraging opportunities while mitigating risks.